Welcome to the 2021 Economic Depression and Preparation channel. I'm your host, Tony. Thank you for joining me once again on this Wednesday, Hump Day, October 27th, 2021 edition. Please be sure to hit that subscribe button. Preach to me for all of the latest financial news in the United States and sometimes beyond. I appreciate your support. Today we're going to get right into it. We're just going to be talking about a few things here about the housing market cooling down as mortgage rates continue to rise. And we're also going to be talking about the GDP, growth, consumption. Things are stagnating at the shipping ports, but they're also stagnating in other places as well. And so we're going to talk about that and also about how pension fundings and the pension crisis that could be coming later on in 2023, 2024. As many state and local government municipalities continue to tighten their budget or will be tightening their budget amidst trying to get out of this pandemic situation that we're in now with COVID and everything. And so let's get right into it, guys. I want to first start off with the mortgage rates. According to CNBC.com, article here today, mortgage rates rise to an 8-month high, tanking refinance demand. You know, initially they were telling people that had gotten into the height of this housing market earlier this year before the summer that, you know, you can get a high interest rate and then later you can refinance that sucker after about a year or two, and that will lower your monthly payments. The average contract price for 30-year fixed rate mortgages with conforming loan balances increased to 3.30% from 3.23% earlier. And as you know, we had record lows during the height of this pandemic when it first started back in March 2020. And here we are almost a year and a half later into this thing, and rates are already jumping up as well as everything else. But this is just falling in line with everything else. Gas prices on average have jumped up 25 to 30% on average just in the last 2 months. Reports are coming out the nationwide average for gasoline, a regular unleaded, is around $3.40 a gallon now. Unbelievable. And this is in states that traditionally don't have high gas prices during this season. We're heading into fall season, winter season. They're switching over to the winter blend, and things are still high for this time of year. Refinance demand fell 2% week to week, seasonally adjusted, of course. And so, listen, if you're not making wages and salary have not increased in the last 40 years, okay? That's a long time. And so since wage and salary increases, or cost of living increases, as I like to call, have not kept up not only with inflation that we're seeing, but it hasn't kept up with the general demand, the general cost of living demand from energy, utilities, transportation, housing, food, etc., then that means that housing is cooling down here. And so not only is housing market cooling down right now, and we predicted this, I told you a couple months ago that toward the summer of 2022, this housing market is going to be in some major trouble. And that's including the big investment companies like BlackRock and all of that are trying to buy and flip these houses so they can rent it out at a higher price to you and I. They're going to be in trouble too, because the demand is going to be tanking, not only in the refinance market, but in the initial starter home market, the single family home market, and the townhome condominium market as well. So mortgage applications to purchase a home increased 4% for the week, but were 9% lower than the same week 1 year ago. So people are looking at homes, but they're licking their chops now. They're patiently waiting because we're in a situation right now, ladies and gentlemen, that we're going to be into a stagflation into hyperinflation. The deflation that I was previously forecasting to come suddenly it's not going to happen as fast, because the money printing now, that with all the money printing that we've seen over the past 2 years, either from the coronavirus bills or from the stimulus checks, the $6 trillion is just now getting into this. We're seeing the repercussions of that in the system. And so now, who is going to buy all of these new and existing homes that are on the market? At the same time, their prices are rising because existing home sales rose to 7%, beating estimates. So that tells you that people are looking for not necessarily new start single family homes or townhomes or condominiums, but they're looking for existing used homes, okay? And they're trying to look to rehab it and to use it as an investment property or second property, or they use it as a retirement for a lot of people that are moving from up north or moving from out west. That is what's going on. And so the Federal Reserve has a conundrum on its hand, because next year they're going to be faced, next summer they're going to be faced with the issue of trying to raise this interest rates up at least 20.25%, not even the 1%. We're just talking a quarter of a percentage point. The battle, this stagflation and hyperinflation that we're seeing in this economy. Now, this is from MarketWatch.com. public pension funding hits highest since 2007, powered by market returns. You notice it stops because 2008 we had the big crash, as you know, if we were back then in 2008. So plans gained a median 27% in financial markets so far. But as you know, what goes up must come down. Who's going to fund these big pensions from police and firefighters from states such as Ohio and Illinois, Michigan, California, New York, Texas, Florida? Who's going to fund California police, firefighters, teachers, municipal workers, public pensions? Who's going to continue to pay into this? Well, we're going to have less workers in America in the new system. The new digital automation economy is going to have less workers like this, and no more unions. In this socialistic, technocratic new economy, new world order that we're going into, there's going to be less of this. So who's going to pay into these pensions? Who's going to be working to fund these? Working at at a Starbucks or McDonald's or a $15 an hour job is just not going to cut it in this hyperinflation, stagflation market that we're heading into in 2022. And this is very dangerous because people are saying right now, oh, my 401k is up, everything is up, the stocks are up, Dow Jones is above 35,000. But what goes up, folks, what must come down. And so we're almost to the height of this bubble coming into 2022, okay? And so I would say by fall 2022, this thing is going to be an absolute disaster because we're already, thank God that we're not bleeding as many jobs as we've had. The jobs report comes out tomorrow at 8:30 a.m. I will give you the latest on that. They're expecting around to lose down to 200,000 jobs lost. Remember at the height of this thing, we were losing over, what was it, 750,000 jobs a week in this economy? As you can see, Yahoo Finance was reporting today that Q3 GDP preview, economic activity likely decelerated substantially amid Delta variant supply concerns. Okay, now call it what you will, we're going to see a stagflation. It's already happened here. The third quarter GDP is down. That's the gross domestic product. The U.S. economy likely expanded at its slowest clip over a year in the third quarter. With a reopening surge in activity quickly beginning to fade. Yeah, because there's no more stimulus checks coming to Americans. Wages are stagnated for those of us who are working, between white-collar workers, blue-collar workers, freelance workers, gig economy workers. Everybody's feeling the pinch because there's only so much money to go around, but yet personal consumption expenditures rose to 6.1%. Inflation right now is at 7%. Real inflation, if we're not counting, if we're putting in gas and everything else, real inflation is at 15% in America right now, but the numbers that they give us from the Bureau of Labor Statistics holding steady at 7%, 6%, 6.5% according to numbers that they give us. But guys, Containergeddon. Now the supply crisis drives Walmart and other rivals to hire their own ships. Ports at Long Beach, California, ports at Jacksonville, Florida, Baltimore, Maryland, Tampa, Florida, all of these major ports have ships waiting to get off the coast of the Pacific Ocean and into the ports to unload, but that's not happening. Big retailers are now paying money to bring their own ships in so that they don't have to be reliant on Asia supplies. But companies that are reliant on cheap Chinese goods for the holiday season are going to face a hard time, and that includes Walmart. That includes Target. That includes your dollar stores, okay? So if you are looking on the market, if you plan on, I know they started out putting out Christmas holiday things. If you plan on getting a big holiday load, you might want to start now. I myself am just going to be very cautious. I'm not really, it's going to be kind of a subdued holiday season for many reasons. But the financial reason is going to be the main one. You need to continue to stock up on supplies of food, water, medicine, clothes, durable goods, because durable goods is what's going to get you through this, because we're looking at a long-term event. This is not going to be a 1 year, 2 year supply crisis. This is going to last through 2024, 2023, 2024, and that's as we transition into the new world economy, as you all know. And so this supply chain disruption is just going to be horrible, because that means that many people, more than 60 container ships containing clothing, furniture, and electronics worth billions of dollars, are stuck outside Los Angeles and Long Beach terminals waiting to unload. And this has been for weeks. Word on the street is that there are more than 85 ships right now stuck outside. Like they said, there's been 85 ships, more than 60, obviously. So now, here we go. And they just mentioned the names I said. Target, Home Depot, Costco, Dollar Tree have said they've begun chartering ships to deal with the slowdown of sea networks that handle 90% of the world's trade. Okay, so they're going to pass those costs on to you and I. That means you're going to see prices rise at Home Depot, Costco, Dollar Tree, Target on toilet paper, anything that you use, tuna cans, pasta, lawn furniture, home and garden tools, seeds, anything that we use on a daily basis, those prices are going to be going up. They're going to pass those costs on to you and I because they're paying for charter ships to come in and to circumvent this bottleneck. Now, whether this is done on purpose, it probably is. Some of it is, but some of it is not. And some of it means that we're going to be into this big thing that's going to be happening through the remainder of this year and into next year. So I encourage everyone to continue to get supplies. If you can get a Berkey water filter, or if you can get a Sawyer water filter, get that so you won't be still relying on the city municipal water systems. If you can get, because who knows, we could have blackouts, brownouts. That is a very real possibility. Whether they blame that on solar flares or solar storms in space, or whether they blame it on the pandemic, people are quitting jobs at the plant, at these energy plants or water plants. It doesn't matter. The point is that we have to be prepared because we're given this chance to prepare. Okay, countries like Vietnam and Indonesia, plus a power supply crunch in China. Okay, so we have so many goods. We have too many dollars. No, I'm sorry. We have too many dollars chasing too few goods, and that leads to hyperinflation, ladies and gentlemen. Stagflation first, and then hyperinflation. Okay, and hyperinflation is not going to be extreme. Like I said, things are creeping up every month, 5% here, 10% there, as you know. But eventually, in the collapse, because this collapse is different than the 1929 collapse. You have to remember, in the 1929 collapse, things collapsed in one day. This is not a one-day collapse. This is a year-by-year collapse until 2025. And so I encourage you to continue to, if you're in the city, you can still do urban prepping at one of these big major cities, but you eventually are going to have to leave because crime is going to get out of control, and it's not going to be in the usual spots that, we normally on the south side or on the west side. No. This is going to be crime in suburbia and of course downtown. Could even be as far out into the hinterland before we get to the rural lands where things and get kind of people say, I ain't gonna bother to go out there to fool with those people. So that's why I say, and I tell everyone to get prepared, including myself, because you're going to be facing a situation where as the jobs dwindle, as the supplies, as the municipal services dwindle, because remember, the tax bases in these cities are going to be hurting. They're eventually going to have to face bill, and the federal government is not going to be able to cover every major city in the United States bill, in terms of infrastructure improvements and all that stuff. That remember, President Biden has gone extremely quiet on the infrastructure bill. As you notice, the media has not been focusing on that as much. And that's because they're trying to renegotiate the terms and the money. They're not going to get as much money as they need to repair the infrastructure to come on a level that's going to bring us on the superpower level like a China or something like that. So that's why I'm telling you guys that since the infrastructure is going to go down, crime is going to go up majorly in these cities. And you don't want to be trying to wait in waiting in a line for 8 hours for anything, whether that's bread, water, or these containers don't come in, furniture, electronics, solar generators, whatever, candles. You don't want to be waiting at 10 hours in the line because that's when fights break out. That's when shootings happen. Anything can happen, at any time. And you guys know that because, security is your number one priority in a collapse in situations like this. Now, the good news for us is that we're blessed that this collapse is happening in an orderly fashion for right now. It's not people jumping over each other yet, doing Black Friday or something like that. You know what I mean? It's not people running the doors or knocking over anybody. So we're blessed in that sense. We're blessed to be alive. God has blessed us, tremendously to have food and water and everything to drink, on a daily basis. Unlike 90 or 80% of the other world, people are leaving other countries, whether it's Afghanistan, Lebanon, Jordan. People are leaving Haiti. People are leaving and so many other countries, Sierra Leone, because of what? What is the number one reason? Yes, it's political strife, but it's economic, okay? So everybody's coming here to try to get on this lifeboat called America, but we're having the same problem over here. A lot of our people are struggling, not just financially, but mentally, emotionally, and spiritually, okay? So the whole world is in a state of spiritual decay, mental decay, and obviously financial decay. So we're moving into a time where we all have to help each other out as family members, as friends, as neighbors, and do it in a way that's, kind of incognito. Remember, as we continue to prep, always keep in mind, your operational plans, your standard operational procedure, is, to keep it to yourself. Don't come out flashy looking and flashing, what type of supplies you have or what, in these streets, because it's going to become very dangerous. And whether that happens next year or the year after next, it's coming. And President Biden and his team know it. They've already geared up security in these cities, riot gear security. They already have militarized the police and militarized whatever, because they know that crime is going to be a thing that's going to get out of hand when people get hungry and they can't get the things they want or medications they want. It may take months of food. So we're blessed that we have a chance to orderly receive this collapse. So sorry I went a little long today. I had a lot to talk about because it's been a couple of days, I know. But thank you for bearing with me. I will be back with more information at a later date. You guys be blessed. Stay tuned. Much more coming, and keep prepping. Thank you.